and flows in global commodity markets are usually underpinned by prevailing long-term trends, most recently highlighted by the rise of battery metals such as lithium and rare earths. But it also pays to stay on the lookout for unexpected catalysts that can spark a surge in investor interest. Changing market conditions means prospective ground held by exploration and development companies can sometimes become significantly more valuable in a short space of time. In that context, antimony is one such commodity that has caught the eye of investors in 2024. Fairly scarce by nature, antimony deposits are scattered across the world without a major source globally, although China remains the largest supplier and producer. So what makes antimony such a compelling investment prospect? Well, we can start with its core use case in the defense sector, where it's a core component in military industrial applications such as ammunition and protective equipment. Amid rising geopolitical tensions, antimony prices were already on the move in the first half of this year. And that was before an unexpected announcement in August by China's Ministry of Commerce, which declared export controls on antimony and antimony-related materials. The move was viewed as a significant step in the ongoing battle for tech supremacy between global superpowers, the United States and China, which of course is underpinned by the supply of critical minerals. In response, investor demand for ASX explorers with antimony assets sparked an industry re-rate of the sector, with some companies consolidating gains of more than 200% since the news was first announced. Following the initial round of excitement, the spotlight now turns to the merits of each project and which companies are best placed to commercialise their antimony deposits. And there is no better example of that than Cuba-focused explorer and budding producer Antilles Gold, where the rise of antimony as a valuable commodity has attracted plenty of eyeballs to the company's advanced Demajagua gold-silver-antimony mine situated in Cuba. The Demajagua mine is expected to be developed in the near term via a joint venture with the Cuban government's mining company, Geopolitical, with an initial scoping study released in March last year, pointing to a potential NPV of $196 million. Pre-development activities are currently underway at the mine, with the antimony exposure a key element to be investigated by a new scoping study scheduled for next year, which will encompass the project's expansion while also incorporating a processing facility and the production of a gold doré and an antimony-rich concentrate. Just this week, the company released a hefty antimony production target of approximately 4,500 tonnes per annum for Demajagua. As a headline figure, it's quite impressive, particularly for a company capped at 6 million Aussie dollars and with exposure to a commodity price that is running rampant. Now, to put that into context, based on production targets advised by the company's consultants, and at current prices for gold, silver, and a potentially conservative price for antimony, the company believes revenue for this concentrate could be in the order of $84 million per year for the 9-year mine life for the first stage open pit operation. Antilles aims to have the project development ready by mid-2025, and with the antimony price showing no signs of slowing down, this is one small cap that might be timing its run to perfection.